We're joined by Nathan Sheets, Citi Chief Global Economist. Nathan, thank you so much. Really good to see you, and thanks for joining us. So as we look at the potential risks that remain in the economy, and this is something you wrote about for Barron's recently, it seems like monetary policy is still sort of tops on the list in terms of the tightening that's happened and the effect it could still have. So what are you watching to see signs of that?
Yeah, central banks have been very vigorous over the last year or two in terms of their rate hikes. And, I think it has slowed the global economy, but not nearly to the extent that we expected. My sense is that there's still some of the headwinds associated with that tightening that are in play. And some of the key issues I'm watching is to what extent do banks continue to restrict credit to households and firms? We've certainly seen some of that. And then if firms can't get that credit or households can't get as much credit, what does that mean for spending and investment in the economy more broadly? I think we're also thinking hard about the so-called tightening of financial conditions that has come along with these higher rates. And on the one hand, you could say financial conditions are tighter because the 10-year Treasury yield is now over 4%. It's much higher than it was 2 years ago when the Fed started hiking. On the other hand, as you were highlighting, equity markets are now over 5,000. And it really is extraordinary, the resilience of the equity market in the face of these rate hikes. And I think that's another key question for the Fed and the economy, that with the equity market this strong, that means people's balance sheets are stronger. And the so-called, what economists term wealth effects that support consumption remain in play. So there are a lot of different channels, and we're watching them. So far, there's been some restraint, but not nearly to the extent that we expected.
Nathan, there are some economists, I want to get your take on this, they have kind of an optimistic view, and they say, listen, global economic growth will improve this year, and in part, foundationally, they're making that argument, Nathan, because they're looking at central bankers. They're looking at policymakers all around the world, Fed, ECB, People's Bank of China. And they say, listen, they're all going to likely ease monetary policies this year as inflation cools. So they stay optimistic. What's your take on that?
I think it's true that central banks most likely are going to be reducing the amount of monetary policy restraint, but that is contingent on what you also mentioned, ongoing and further progress with inflation. And I think that's really the key question in my mind, is what is the, and again, economists would call it the last mile of getting inflation back down to 2%. So far, it's been pretty smooth, and the Fed has made a lot of progress. But now we're struggling with a different kind of inflation. It's more about the tight labor market, high wage growth, and rapid services inflation. And how rapidly does that come off? And then that in turn is going to determine how rapidly central banks are cutting. But if central banks, as you suggest, are bound and determined to avoid recession, they certainly have the tools to ensure that there is no recession by cutting rates.
Nathan, one of the other risks that we've been watching unfold, especially acutely over the past year, is geopolitical challenges and conflicts around the globe, which are not only particularly difficult to predict, but the outcome and effect on the economies and markets around the world is particularly difficult to predict. We were talking earlier in the show about another big geopolitical event, the presidential election here in the U.S., and obviously that's another one that's very difficult to predict. So how are you incorporating that into your models, if at all?
The way we're thinking about the geopolitical environment, which, as you suggest, we've got Russia, Ukraine that's grinding on, uncertainties and stresses and tensions in the Middle East, and literally dozens of national elections around the world, including in the United States. we see all of that as a source of uncertainty. I'm not sure that I would say our global growth forecast is lower as a result of that uncertainty, but these are issues that we're watching very closely. Now, a specific area that we're watching is an implication of what we've seen so far in the Middle East and the disruptions to shipping that have resulted from those tensions. We've seen a significant increase in shipping costs and challenges there. And so it is possible that we would see further challenges to supply chains and shipping costs, which could put pressure on inflation. And that is an area that we're particularly concerned about right now.
Nathan, it was great having you on the show today and just helping us think through all these dynamics. Appreciate it. Have a great weekend.
Thank you.